Okay, we're starting again. Now, this is our cash flow management system. And what that is that everybody out there actually makes good money, generally. They can make 60, 80, 100,000 a year, and that's what you need to make if you're working and you have a job or a business. Now, so what people have is they have fixed expenses. Now, fixed expenses, of course, something you can't change. Your property taxes, and those are going up every year too, right? You're not going to negotiate on property taxes. That's going to be a no-win situation. But then there's also utility costs and then your food, and it'd be nothing to spend $50 a day eating out. But if you buy food at Costco or Walmart, you could probably save about $500 a month on food costs. But fixed expense is what it is. So what you also have is your variable expenses. The variable expenses is your mortgage. People think that a mortgage is a good thing to pay off really fast. So they have a mortgage. So when we talk about how to save money on mortgages, it's a whole different conversation. But then you have your car payment. Of course, you're going to buy a car every 7 years, and you'll probably buy 7 to 8 cars in your working lifetime, and we could save you money on that one too. Then you have your credit card and your short-term loans. So these are called variable expenses, and we're going to help you cut your variable expenses. So then we have some savings. The savings is typically equity in your house. And at the end of your working lifetime, 90% of people, all they end up having is the equity they have in their principal residence. It's kind of a sad story, but it's not a bad thing, because buying a house is a great thing, the Canadian dream. But at the end of the day, a house is actually a liability. If you don't have cash flow from an asset, it's really a liability. So principal residence. So then we have taxes. Okay, so the taxes is a real issue here, because based on your income, this is your income, where your money is being spent is on these areas. So what we do, the first thing we do is we show people how to have a home-based business. You have to have a home-based business, because if you don't, you're just going to pay a lot of taxes as an employee. So we take that tax savings anywhere from $3,000 to $5,000 a year, and maybe $10,000 a year on home-based business. Percentage of your utilities, percentage of your car payment, percentage of some of the expenses that you're incurring every year on these essential things that you're using. Second thing is we work on is we take advantage of the interest carrying charge deductions to borrow money to invest, because the only way you're going to become financially independent is if you leverage. You leverage off people, or you leverage off assets. So first thing you want to start with is maybe a house with a nice legal suite and rent bedrooms to students. That's what I did. I got started off ESL. They pay $600 to $850 a month. That's tax-free money. So you get up to $20,000 a year tax-free money from foreign students here in Vancouver. It's a really huge industry. And you'd be surprised, $20,000 a year is a huge game changer when it comes to not having to pay your mortgage. Those students will actually pay your mortgage. So your living expense is virtually zero. All you got to do is hire somebody part-time to supervise them. And the third thing is with the home-based business, the interest carrying charge to make investments, to leverage controlling a large asset with a little bit of money, and that future value of that asset will be very significantly helping you for your financial freedom. So the other thing is we call this a capital cost allowance. Now this is a fascinating thing, because it's going to teach you how to use a compliant statutory deductible expense that will help you recover taxes that you pay at the higher tax rates. So that's what we're going to talk about in the next video, is how to magnify your tax savings by shifting your assets from an RSP or from your income into a tax-free zone. So that's called the capital cost allowance, and we're going to learn about that. It's a fascinating industry. So that's how to increase your cash flow by shifting your cash flow into home-based business, interest carrying charge deductions, and capital cost allowance.